All right, guys, good morning. Welcome back. Let's dive into this. It is a big day and we got a lot to get done, so let's break it down. First things first, got to get the music on. Well, that probably woke you up. That was pretty loud. All right, let's get going here. So, first thing we're going to do is go through my notes. We had the House bill, the coronavirus relief bill, drop yesterday, 1,800 pages. So this is being called the HEROES Act. We had CARES last time, and this time it is the HEROES Act. There's a lot in here, guys. There's a lot to break down. So I'm going to pull up my notes, and we can go through those. So you're welcome to read the 1,800-page document. I'll put the link in here for you guys. You're welcome to go read it in its entirety, or you can not and just go through it with me here. So this is a breakdown where I went through, and every time they had itemized, okay, well, here's what we were doing, with just a general headline and the amount of money that we're putting towards it. So the bill in its entirety, they're estimating is about $3 trillion. Let's get going through this. Oceans and fisheries, prison system gets 200. These numbers are all, so this is 200 million, this is 100 million. I started by putting pretty much everything that was listed. Then I started to take note of the really big things and left the millions out, just because we're going to start getting into billions really quickly. So these things are relatively small. State and local law enforcement, 300 million. I know when I say 300 million, people are like, well, that's not really small. When you're looking at a bill that's throwing this much money, like 35 million for additional salaries for the Treasury, $35 million is a lot of money. But the reality is that the very next thing we're going to look at is $540 billion. So one of the things that's been left out of a couple of these bills is the territories that are attached to the US that aren't necessarily states. So Puerto Rico, Guam, Mariana Islands, Virgin Islands, American Samoa. They're affiliated and tied to the US, but they aren't official states. They're hurting. And so they've been given a slice of this. Tribal governments have been given a slice of this. So this is a breakdown, these dashes of different pieces of this. So they're going to see $20 billion. You're going to see $20 billion go to the tribal governments. You're going to see tribal governments would be First Nations. So Alaska and anybody across mainland US that is First Nations. And then the states, depending on which category you fall into, a COVID needing state or a less COVID needing state, that's where you're going to see that fall. So $250 billion to each. Local fiscal relief, so this is to support local and state government. You're seeing $375 billion. Election assistance, this is for things like ballots, distance voting, assisted voting. That's seeing $3 billion. This is a big one, internet. So emergency connectivity and emergency broadband. This is getting $5.5 billion. And this is one that's going to come up over and over again, because this is one of the issues that I have, is that $5.5 billion. $5.5 billion going to the internet, making sure people have access to it. And I'm not arguing that the internet isn't necessary, but between the modernization fund and internet, we're seeing $6.5 billion. Okay. that's going to become a bigger issue as we get down the line here a little bit. But emergency disaster economic injury disaster loan grants, so EIDL grants. This was in CARES. They've expanded it. They've added another $10 billion. Small Business Administration's loan facility. So these are loans specifically built for small businesses. We're going to see $75 billion there. This is a big one. USPS, they want to hand USPS $25 billion. So instead of saying USPS, you need to just maintain your own business, your own bottom line. Now more than ever, as people are shipping things instead of going to the stores directly, USPS should be printing hand over fist, and they're not. And $25 billion apparently is what they need to stay afloat. I see this one being a relatively big deal for the Senate. The Republicans, as they look at this, I think it's going to be a big problem. I really do. Yeah, I mean, there's a whole bunch of issues with the USPS, but I don't see the Senate approving $25 billion to bail out the USPS, especially when there's private options available like FedEx or DHL. Federal assistance, Operation of India programs, assistance to territories, Indian health services. Now, I'm not the one that uses this term. That's exactly what it's labeled inside the bill. Okay, guys? Training and employment services, primary health services. Okay, so this is the one that shocks me. Okay, so remember the number up here that we were talking about where Internet and Modernization Fund is seeing $6.5 billion handed to it, okay? $6.5 billion. And CDC and the National Institute Against Infectious Diseases is seeing 500 million. That's it. So these two right here are probably the biggest that you would expect to see a significant amount of money go towards as they try to combat, approve, and control this drug. What we're seeing instead is we're seeing nearly triple the amount that's given to the CDC and the NIAID given to Internet. Okay. Now, remember, guys, as we're going through this is going to be relevant to the stocks that you trade. Consider the companies that are going to benefit the most from the numbers that you're seeing here, right? We know that $6.5 billion is going to be pumped into infrastructure for the internet, which means companies that are looking to develop the internet into a 5G behemoth like T-Mobile are going to do quite well, knowing there's a government stimulus package to encourage you to do this. So that's definitely worth taking note. Meanwhile, as far as COVID getting better anytime soon, well, I mean, primary healthcare services need this money. This is a drop in the bucket. $7 billion is not enough for a national healthcare system, but this right here, $2.5 billion for these agencies is not enough. The other one that comes up a lot when the Democrats drop a bill like this is they say, well, this is for the little guy. This is for the low-income families. This is for the people at the bottom, and we want to help them, and they need the help. Children in low-income families, $1.5 billion. So just to put that in perspective, that's a quarter of what Internet's getting. Children in low-income families. Public health social services fund, state fiscal stabilization fund. So the states have mismanaged their finances, and so we're going to give them a $90 billion bailout. Highways are being eroded, and the issue that I have with this is this bill is meant to address current COVID related needs. So we are in an economic shutdown. There's a problem right now with the economy. There's also a problem with COVID. Those are the two big things that we're measuring, right? With COVID came a nationwide lockdown, which means that a lot of the costs around fixing and repairing roads, highways, whether that be municipal, whether that be state roads, there's been nobody on the road. There's been no wear and tear, which means that you didn't have to shut it down, which means it's not nearly as costly for you to repair them. If this stuff was being repaired during the lockdown, the cost on this should have been significantly lower than they normally will. Also, municipal governments already had a budget line for highway and road repair, so that we are giving another $15 billion. Again, we're talking a number that is 8 times what we're putting into the CDC and the NIAID, this is a problem for me. This would be a big one that I highlight of like, okay, what's going on? Now, public transportation is getting $15.75 billion. And my thing with the public transportation is this. Are you looking to sustain existing systems that are outdated? Are you looking to make sure that those systems can update and move ahead in order to be safer when we get back to social distancing with an open economy? That's not clarified. Higher education fund. We're going to pay $10 billion to send people to school. This is a nice little tag on to this thing. I'm not sure how that's COVID related, that you're paying for people's tuition, but that's a nice little tag on there. I'm not a huge fan of them just tacking additional things on here. It's not like the government is sitting on $3 trillion. Like, oh, we got this extra $3 trillion here. Where are we going to put it? They are literally going to create this money through the Fed. The money printer is going to go burr. We're going to see the Treasury print $3 trillion and say $3 trillion exists, and they're going to put this out. That's how this is going to work. It's just nuts, the amount of money that's going to come here. Now, we get to a point here in this report where the priced out figures start to just disappear. And what you have now are are whole sections that are saying, well, what we want to do is expand this. We want to give people more this. And that's what the headings that we're about to look at are going to have here, okay? This does not mean that that this is its entirety. There's a lot of details about who gets what and how, and there's a lot of intricacies and legal in it. You're welcome to go read it. Again, I've posted the link there. You guys should be able to go and click that link and read this for yourself. There's a lot of details in there about who gets it, how they get it, who's exempted from it, who can, how long you can claim it, where you can claim it, how you can claim more of it. But yeah, as we get in there, there's no price tag attached to this, and that's a big problem for me, because that shows me that this thing was just rushed through and as far as its creation, and the House hasn't been in session, which means the House has had nothing but time for the past 4 weeks, 3.5 weeks, to sit down and actually get this thing done with some detail and to price this out accurately. It's really scary when you're asking for a blank check of like, this is just what we want to do. We don't know what the cost is. Whatever the cost is, we'll pay it. Expansions to existing credits, not priced out. Health provisions and private insurance stimulus. So paying for healthcare for the elderly, paying for healthcare for the low income, private insurance claims. Neither of those are priced out, and they want to do something about that. A COVID portal, so specifically the creation of a COVID portal. We know how well the government does with creating websites and digital assets. They suck at it, but they want to create a COVID portal. That's not priced out. Tribal finding and research health inequities. So again, looking at First Nations groups in Alaska, mainland US, they want to take a look at what healthcare provision looks like for them, including COVID, but not exclusively COVID. So they want to look at the overall healthcare being provided in First Nations communities. That's not priced out. And this one in twice here, but it's $100 billion to the Department of Health and Human Services. So this is to help ease the overload to that system. Loan forgiveness. So any existing loans, there's a large amount of Americans that have loans out there. The US government wants to pick up the tab on some of that. That's not priced out, and that's going to be a big bill. Now, I know a lot of people that are sitting there with loans, that are sitting there in need, that are looking for help, that are looking for assistance. They need this stuff. And I'm there. I love that the government wants to get moving and going on this, but you have to realize that down the road, there are repercussions to the government just writing itself a blank check that result in either you as you get older, or your children, or maybe even your children's children having to face a large bill on the government. A government that is just flooded with debt. We are currently looking at a $3 trillion bill on a $20 trillion GDP. So we're talking 15% of the economy, 15% of the GDP on this single bill. We've already done other bills. I would say we're getting closer to that 25% of GDP mark just on the stimulus that we're pouring into the US. So this is a big deal. Yeah, loan forgiveness is there. It's not priced out. Losses in the agricultural sector, not priced out. Military and vets coverage and healthcare coverage, provisions for homes, provisions for mortgages, provisions for businesses, provisions for ownership, provisions for defaulted loans. That's all in there. None of it's priced out. Defaulted vet loans does have a price line. Job creations loans, this is specific to veteran workers. That is priced out. Essential workers and at-risk individuals. This is a big section. I like this. I like this line where those that are currently working the front lines, they have not stopped working throughout the crisis and they put themselves at greater risk. There are provisions in there for $12 billion to help them and help them get some kind of financial boost. Emergency aid for state and local, they get $9 billion. So that's another one that was a staggering number for me, where we're seeing state and local law gets $300 million, which is a lot of money. Community law enforcement's getting $300 million. That's a lot of money. Prison system gets $200 million. That's about $1 billion between these four law-related ones. But when you look at the local fiscal relief fund, $375 billion, right? Like, I just feel, well, no. Emergency aid, state and local, receiving $9 billion on top of all of these other billions of dollars that are coming out. I think if you're going to write a check for the state fiscal relief fund, I mean, you've got $250 billion going to states here on coronavirus relief, right? Then you've got local fiscal relief, $375 billion. Some of this, the state relief, should be trickling down naturally into municipalities. That you've got municipalities receiving $375 billion, and then you're taking additional provisions for emergency aid and state local. I don't know that another $9 billion is necessary here. You've already given them a massive amount of money. Medical equipment for first responders, not priced out. That's a big bill. Modernization of small business. So they're looking to find ways to give small businesses that don't necessarily have a large payroll. They don't have a lot of employees and haven't been able to take advantage of fiscal stimulus so far. They're trying to find ways that they can get money to them. Modernization of small business is one. So if you've got a small business in the US and you're looking to advance it, you're looking to update it, you're looking to make it more modern, there is a byline in here for you. It's not priced out. We don't know how much that is. Emergency rental assistance, homeowners assistance, there's a lot of stuff in there. Liquidity for property owners, mortgage service providers, homeless assistance fund. So all of these funds are directly related to people either not being able to pay their rent, or from the other side, people that own property that aren't receiving rent. And there's a ton of stuff in there on that, guys. There's a lot of that going on, and none of that is priced out, which is a big deal. This is a big bill. Like this is going to be a huge chunk of this bill, and there's no pricing on that, which is a large red warning symbol for me. That was a short album, so let's go back and see what else we can find. I definitely just want some music to keep going here first thing in the morning. Okay, let's keep going here. Emergency rental assistance program, there is $1 billion in there for that. That is priced out. Repayment forbearance clause. So again, this is to do with the people that haven't been able to pay their mortgage. That's going to be there. They want $45 billion in student loan forgiveness. I mean, that's neither here nor there. I don't know that necessarily needs to be in here if you're tackling employment and everything else, but we'll see what happens there. This one most likely will be a point of contention, but we'll see. The USPS definitely will be. Small businesses and nonprofit collections not priced out. $2 billion to local banks. And I think that this is an important one because there's a lot of people looking to their local bank for loans right now, for financial assistance, for forbearance. I'd actually like to see that number a little bit bigger. I'm not talking the big guys. We're not talking HSBC and Goldman Sachs and the big guys. We're talking the little guys that are trying to help you locally, your mom and pop bank. Now, this is one that I have a huge problem with, and this showed up about halfway through, 3/4 of the way through the report. there is dog-eared $6.8 billion to the marijuana industry. Pot or hemp products, so not specifically marijuana, but pot and hemp products. There are provisions for up to $6.8 billion to be handed to the pot industry. Now, that may not seem like a big deal, but remember again, the CDC and the NIAID are only seeing $2.5 billion. So that means that we are giving almost triple the amount of money to pot and hemp products that we are to the CDC. That should be alarming. We're talking about the government covering emergency medical leave, emergency paid sick, every worker who's currently working protection. That's looking like a massive amount of money, but not priced out. As far as E-rate support for Wi-Fi hotspots. So again, here we are, more internet stuff, not priced out. Rural health care, so people that are outside even suburbia, little extra cash there. Then at the very end of this, and this one is nuts, last 400 pages of this document, absolutely no pricing whatsoever. None. And tucked into the back of this, what they've done is they've put in a whole bunch of stipulations about the upcoming election. How voting will work, where it will happen, delays on it, what the ballot process should look like, who can vote where, when, why, and how. They've tucked that all into the back of the bill. If this is a financial stimulus bill, this should have absolutely nothing to do with how you vote as American citizens. This is absolutely an unnecessary byline that was tucked in to the back of this bill, hoping to just get pushed through into law with nobody checking it. There's no way these provisions about altering the electoral system are going to make it through on this bill. And that the Democrats have put this into this is negligent. I agree that people need the money now. They need this thing to go through. But the more that the Democrats try to sneak things in like this, the longer it's going to take. There is no way that Senate Legal is going to read this and approve that. No way. It's not going to happen. Other things that just snuck into the back end there are alterations to immigration law and how long immigrants can stay and expectations of homeland security. And again, that is a Democrat election promise that they are trying to sneak into the bill. It really isn't relevant to financial stimulus. That should have been presented in a separate bill. And the last one was that there's additional expansion of rural digital. They haven't priced out. So that's it. That's this big master bill as a whole. Like I said, guys, it's 1,800 pages. You are more than welcome to go and read it yourselves. It was quite the read last night. Expansions to Medicaid, all kinds of stuff tucked into the back end of this. They just shoved a whole bunch of stuff in the back end, like maybe this will get through. In reality, I see the last 200 pages just being cut when the Senate takes a look at this. But there it is, guys. That's the overview on the Heroes bill. Hopefully that was helpful. Let's get down to business on my portfolio due diligence for today. So pretty decent day yesterday, even though the market completely tanked. I don't know if you guys were watching the market yesterday, but let's go one day. So here's the market yesterday, had a slight rise at the gate. So I mean, we opened up here at 286, it dropped, came up, and we're talking it went up maybe $1 over. Well, that bill has nothing to do with Trump. Trump hasn't even seen that bill yet. That bill is presented by the Democrats in the House. So the issue with this is I don't care whether you're a Democrat or a Republican or you're the president of the U.S. right now. The U.S. economy and the U.S. people need this stimulus to go through. And the more that you play political favorites and trying to get your party's agenda through alongside these stimulus bills, the longer people that are just everyday people like you and me have to wait for this money to get there, because there's no way one side or the other is just going to let you have free reign putting whatever you want into these bills. $3 trillion is a serious thing. It needs to be looked at in a serious way. You can't just say, yep, good, go. Just whatever's in there, that's fine. That's how you get things that are shoved into bills that are really, really detrimental to the country. And so it's going to take a while for that stuff to actually get through. Your personal opinion on whether Trump is a good president or a bad president has nothing to do with this. At the end of the day, he is just the guy that signs these bills after the Senate and the House approves it. So really our focus is on how the House that is currently run and operated by the Democrats it has put together the bill, and where the Senate, as a Republican-run Senate, is going to review this and say, this is not going to go through, this is not going to go through, this is not going to go through. The fewer steps that we have on that back and forth, this is unacceptable and is not going to pass, the faster that we see that support actually coming to people, which is where I think we really need to dial in and focus. So personal opinion about whether you're a Republican or a Democrat, whether you like Trump or don't like Trump, is really irrelevant when it comes to the HEROES Act and these stimulus packages. You need to remove yourself from partisan politics and actually look at what it is that's being passed in the bill and how can we get this to the people as quick as possible, which is a conversation a lot of people don't want to have, but you need to have it. Trump actually isn't going to do anything with the bill. So the only way that Trump is even going to see this bill is after the Senate and the House have approved it. So first, the House is going to take a look at this, and the House Republicans are going to say, okay, well, here's the issues we're going to tell you that the Senate's going to have. And hopefully the House Democrats listen to those qualms. There's a lot of good stuff in here that's going to help in a big way, especially with the small businesses, the local assistance, even the small amounts that they gave to children and low-income families. There's a lot of good stuff in there, and that's stuff that we went over. The link again is there for you guys, but he's not actually putting anything in or out of the bill. His job at the end of the day is just to sign it after the Senate and the House have decided what's in the bill, which is a common misconception, and the news often touts that of Trump is going to do this to the bill. That's not how it works. If anything, if people wanted to have a qualm about the Republican side, it would be Mitch McConnell who's taking things out of the bill. But that's a much different argument than Trump's doing it. That's the representatives in the Senate that are doing that. So yeah, that's a very different thing. So yeah, SPY yesterday, guys, went up to a little over 287 and then dumped. This was a massive dump. People couldn't believe this. This is a roller coaster ride down. We saw a $6 drop here. He can veto the bill, that's true. But before the bill even makes it to his desk, it has to be approved by the Senate. And the Senate won't approve the bill as it currently stands. After it has been through the Senate, Trump won't vote it down because the Republican Party as a whole in the Senate has approved it. So that's why every stimulus bill that's come to his desk so far, he has signed. There has been no veto of any of the previous stimulus bills because he recognizes it's important for it to go through, and it's passed through both houses. So you have the House of Congress that passed it, and you had the Senate that approved it. So he can veto the bill. He hasn't even looked at vetoing any of the stimulus bills so far because the Senate is acting as the Republican measure to make sure that they don't just write whatever they want into there from the Democrat side and it goes through. And vice versa, the Democrats owning the House have made sure that any bill presented by the Senate doesn't just get passed through. There's deliberation there. So right now you're seeing a very interesting system where, yes, you have a Republican president, but because it is a Democrat-owned House and a Republican-owned Senate, they both have to approve the measures as they go through, which is meaning that there's due diligence and give and take on both sides. So Trump ultimately just signs it when it gets to him because it has gone through a Republican filter by the time it gets to his desk. Especially headed into elections, there's no way that as the bill arrives at his desk, he's not going to sign it. But there's no way that this bill as it currently exists is going to hit his desk. He will never see the bill that I read yesterday, that 1,800-page bill. It won't be on his desk. I think that you see nearly 400 pages of this bill cut out because they are either completely unrelated to financial stimulus around the economy shutdown and COVID, or they are simply election swipes by the Democrat Party trying to get political agenda for their platform through on stimulus. So this massive drop in the market here, this is on Papa Powell. So this is Chairman Powell's speech happens around here. And then we see this decline. And Powell came out yesterday and said, okay, guys, we are seriously looking at potentially the worst recession since World War II. And that's a huge deal. Like we're talking 70, 80 years at this point, right? That's a massive, massive deal. So, I mean, the market reflected that in a really, really big way. One of the things I want to show you here, though, so here is, I want to make sure I've got these both on the 1 day. So 1 day, not 5 seconds, 5 minutes. 1 day, 5 minute calendar. Okay, guys. So MFA here is an REIT, down, down, back up, and then even. Down, sideways. So we saw some market sentiment in some sectors yesterday. Do I think the country should be reopened? So my stance on the U.S. reopening would be to open based on COVID exposure. And what I mean by that is this. You have massive sections of the country that are agricultural where the per capita is extremely small on COVID exposure. We're talking the farmland, right? The breadbasket, the Midwest area, Oklahoma, even Utah on one side of the mountain, Nevada. Like these areas are small exposure because it's very few people spread over a large distance. I would be okay with those areas opening back up. Wyoming opening back up. I would be okay with that. I'm not currently convinced that major urban centers like New York City should be reopened, but upper New York State, yeah, I'd be okay with that reopening because upper New York State, I've been there. Those communities are already suffering, and the small businesses there are going to disappear, and those communities as a whole are going to be dead if it doesn't reopen. The community will just have to leave because small mom and pop grocery stores and whatnot won't even exist. They can't stay afloat. The payroll stimulus that came through on the past two bills has done nothing for them because literally those shops are run by 2 to 4 people, which makes them ineligible to receive any of the stimulus assistance. So for me, what I would like to see is governors, and this is not even like Trump isn't in charge of the governments in each state deciding when they're going to open up. That's the beauty of the United States. Each governor should be coming up with their own plan, and each governor should know their state, know the major urban centers, and say, if you are in a major urban center, lockdown should stay in force until we can show that there is a decline in the curve on your area. So instead of looking at states, we just look at these great big numbers and say the state of California. Okay, well, Northern California is far different than LA. Okay, those are two very different things. So what I think they need to be doing is tracking bell curves for each major population center or by county. I think that that's the numbers that the governor should be looking at, and the governor should be responsible for creating economic reopening plans for each of their states, which is what Georgia has done. Georgia's taken a look and said, okay, well, we've looked at our state's numbers. We looked at what the actual curve looks like in our state. Our state is leveling. We're reopening. There are states that see the potential risk, like Florida, that has a much more elderly population. They're much more susceptible to the virus, and the governor there wants the state reopened just because he sees the bankruptcy numbers that are coming. And he's more concerned about the dollars. And ultimately, that's the governor's decision. That's the governor's fault. Um, so when you talk about amount of testing, it's a really difficult subject because as far as just the total number of tests that have been done, the US blows the rest of the world away. As far as actual testing that has been done, the US is by far in the lead. The issue with that is if you look at where the testing is being done, New York and California, New York State and California have had the bulk of that. And that's because they're the loudest right now. They're saying we've got the most people, we've got the biggest urban centers, we're the ones that get the tests, which leaves the rest of the country really kind of trying to scrounge for tests as much as possible. Now, the FDA is fast tracking a bunch of different tests. We're seeing faster production. We are seeing more testing. So for me, rural, semi-rural, even semi-urban areas, so the suburbs of a lot of cities, I think it's okay to open those. And when I say open, I don't mean open like things were before. I think social distancing still needs to be a thing. I think masks need to be a thing. If you're sick, have a mask on. Point of contact stuff. I mean, all of those measures should still be in place. And as far as major urban centers, I don't think that New York City should be reopening anytime soon. I think that we should be waiting into June for New York City to reopen. But outside of New York City, there's a whole rest of the state that could potentially be reopening. So that's what I mean by the governors of each state are accountable for running their state. Well, let's see. Let's check. So tested. Okay, so tests. We'll sort by total tests. There it is. USA, 10.2 million tested. Next is Russia at 6, Germany at 3, Italy at 2, Spain at 2, UK at 2, India at 1. So you can see that the US has tested more than the next 3 closest countries combined. So they are by far in the lead. Now, the problem is you have such a massive population, right? So when you look at tests per million population, the US isn't there because the US has 300 million people in it. So when you get to the US as far as per million, now we're talking they're much lower on the list. Now, they are still above a lot of other countries. And one of the big things is you want to compare apples to apples, right? So what you're looking for is countries that have 300 million population. So countries with 300 million population. Okay, so here's a list of the countries, 300 million or more. So India, there's a huge jump, right? You go from the United States that has 300 million, Indonesia has 270, Pakistan has 220. So these guys are close, but these guys are more to the downside, right? And then there's a massive jump. Like this is a huge jump from 300 million to 1.3 billion. But let's compare United States to India and China. Let's go to the upside. So technically, given that they have more population, surely China and India are blowing the US away as far as testing, right? We would agree that if you're a bigger country, you should be doing more, you should have more testing, that should just be responsible. So let's look at China, India, and Indonesia as far as their testing goes, okay? So here's USA, they've done 10.2 million tests. They've done as much as they possibly can, okay? Now let's keep going until we find India, China, or Indonesia. There's India, 1.9 million tests as of today. That's the number per million that they've done. Okay, so India's not even coming close. They're not scratching the surface. Let's keep going until we find Indonesia or China. Indonesia, 169,000 tests. So we're talking not even a tenth, right? Not even 1% of the tests that the U.S. have done. And that's per million, is 600 tests per million. So completely negligible. Now, China's the big beast, right? They've got the economy that's comparable to the US, and they've got a population that's far larger. So surely China should have an amazing amount of tests. Let's just wait and see here where China falls. There they are. Don't even have a testing number there. China. Not even listing their testing. They're not even declaring their testing. Um, so the big deal with China is this: they're not reporting. They have all but stopped reporting. You look at China, and they say that, oh yeah, our curve, our total cases has completely bottomed off, and we're not seeing any more cases. The issue with that is, if you look at a country like China, okay, massive country, absolutely massive. Yes, they have a developed sector of China that is more first world, but they also have a whole lot of rural China. And without any stats on their testing, it makes it very difficult to understand what exactly they are doing or what they're not doing. So you look at similar nations. We should look at the India and we should look at US. So let's look at the bell curve of India again, because they're in the same kind of geographical place in the world. They have a similar population. So this is what we're seeing out of India right now. Okay, and there are areas of India that are very well developed, but we are still seeing massive uptick here. Like this is not stopping. This is growing in a very serious way. And India is in hard lockdown, so that argument of, well, they should be in lockdown, they should be doing more testing. I agree, they should be doing more testing, but this is huge. Uh, Absolutely huge. And it's showing no sign of stopping. Absolutely no sign of stopping. When you compare that to China, who's only at 80,000 cases, claiming that 78,000 of them have recovered, this should be much higher. This is a ridiculous number. This is a laughable number. When you're talking, you have quadruple the population in the United States. You're trying to convince the world that you only had 80,000 cases of this, and you were the first one to get it. You didn't know what this was. You didn't know uh, how to deal with it. You didn't go into social lockdown sooner. Like everything that the U.S. has done well, as far as closing borders, locking things down, going into PPE, massive amount of testing. Right? We don't even know that China's testing numbers are, but the U.S. is clearly leading the world as far as testing. Surely we should be seeing similar numbers. Here's China as far as their total cases, and here's us. Like, look at this number. This is not a realistic number whatsoever. So this is what I'm getting at, guys. A lot of people want to crap all over how the U.S. is dealing with this, but the reality that you have to face is the U.S. is dealing with 300 million people across a very large geographic terrain, whole bunch of different kinds of situations. Oklahoma is going to be different than New York State, which is going to be different than Alaska, which is going to be different than Hawaii, right? Each of those are so unique. It's such a big country across such a wide space. It makes it extremely difficult for testing and measures to be implemented. Also, the government in the US isn't mandated the same way in China. China, the head of Chinese government says, you do this, and they run the military into the street and you listen. And that's what happens by the barrel of a gun. In the United States, that's not how lockdown works. In the United States, you've got freedom of assembly, you've got a whole bunch of freedom of speech, freedom of assembly, right to bear arms. There's a whole bunch of things that are going on. No, I don't watch Robert Reich. There's a whole bunch of things going on in the U.S. as far as just the rights of the people are different. And so how the government can get people to go into economic lockdown, it's more of a request at the behest of the government for the safety of the nation, paired with potential legal fines and maybe an arrest if you're super negligent about it, right? The problem with that is it's not the same as having the U.S. military in the streets with rifles pointing them at you if you leave your house, which is what China sees. So it's a very, very different beast. It's a very different beast. All right, but that's the U.S. at the moment, guys. I'm gonna take a look at the markets today before we dive in here. So Bitcoin up 3.5. Bitcoin has been on a wild ride from up to down to up to down. This is what are we looking at here? A 1-year chart. So let's go to the month to date. So we saw it dip down start of the month down to the $7,000 range, back up to 9K. We had a recent drop back down to 8,500. Now it's making its way back up. Really, guys, Bitcoin, if it drops down below that 8,500 mark, you should be looking at a potential buy up to the 10,000. As soon as it hits this 10,000 range, it seems to taper off and disappear. So that's when you should be looking to exit. As far as the markets go today across the world, we're seeing it's neither here nor there. There's not a lot of positive out of the EU. We're seeing some struggling. So Germany, United Kingdom, and France are all struggling in a big way. India, Russia, Mexico, those are not doing well. Asia seems to be doing all right. They're not booming by any stretch of the imagination. Japan, China, South Korea are in the green. Oil continues to decline despite Saudis and Russia. They're down 3%. Gold just does what it's going to do. Natural gas, more of the same. So not a ton there. Next step is to pull up, I'm going to want this guy here. So these are the stocks that we looked at yesterday, even with the market dumping off. Yesterday, we saw Pfizer come in relatively, can I change let's go 5-day. Okay, so 5-day, yesterday, the 13th, we saw Pfizer hold steady. So that's not a bad thing to see on a day when the market decides it's just going to obliterate itself. All right, Hector, thanks so much for swinging by, man. I do appreciate the dialogue. It's always nice this time in the morning to have somebody to chat with. So thanks for swinging through, and take it easy, brother. Okay, so Pfizer, what we're looking at here is we've got a pretty decent sideways movement on this, and when the whole market just dissipates like it did yesterday, that's kind of encouraging to see. This is even better to see on a day when you've got the market dying. 13th, we start here, it's up 4%. So this is a winner on a day when the market died. This is one of the things that I'm noticing with biopharmaceuticals, guys. I trade biopharmaceuticals equity, so I don't trade options. I trade stocks. I trade stocks in the long term. I'm looking for plays that are a quarter, 2 quarters, 3 quarters, even up to a year out. I do that because I see there's large potential for growing a portfolio that way. One of the things that I like about the biopharmaceutical industry is it's fairly insulated at the moment from everything that's going on with COVID. How much have I earned with trading? So the account that I started in November started with $3,000. As of right now, it's a $23,000 portfolio. So not a absolutely staggering growth, but there is decent growth through the first 5 months of the year. I am projecting, depending on how these plays turn out, I think ACRX is going to be big for me. I think that I think ACRX is going to be big. I think a few of the cancer plays that I have locked in are going to be big. So probably looking to finish the year with a portfolio around 50,000 off of the 3,000 that I started with, which is not a bad number. I'm pretty happy with the growth on that. But the kind of trading that I do is not the trading that you would see typically on Twitch throughout the day or YouTube throughout the day. It's not options. It's not Forex. It's not quick plays in and out. Yep. Yeah. Like 20K. Yep. Not bad. Um, but yeah, the trading that I do is not one that you would see. Like I wouldn't be live while the market was open because you guys have been watching me do very little. My portfolio, I buy, I hold, and that's the end of it. I'm not in options. I'm not on Robinhood. I'm not in and out constantly on stocks. I am constantly watching the stock market to look for opportunities, but beyond that, like I'm not actively moving money around and buying and selling. Yeah, yeah, it's not bad. Um, it's always easy to get those numbers, right? So if somebody's like, "Well, I had 1,000% gain," okay, well, what do you mean by that? Did you start with $10 and you made 1,000? Like that number looks like it's bigger than it actually is. So, really, I just like to keep it to the actual number instead of the percentage. In the grand scheme of things, 20 grand is not a lot of money. What I'm looking to do is actually grow that portfolio into $100,000 plus, and then change and learn how the market actually plays. I've heard that number frequently, that below $100,000, you're just learning the stock market. You don't really understand how it moves and how it plays. And once you get to that $100,000 mark, the next threshold is 1 million. And then after 1 million, it's 100 million. And then yada, yada, yada. I don't even need to think really past that because I don't know that I'm ever going to actually get there. I don't know that I have a desire to get there. But yeah, so what I like about the biosector here, guys, is that it is relatively stable versus the market. So we saw a massive drop in the SPY yesterday, and here we are, May 13th. Here's another biostock. It didn't really. This looks like a massive drop. It's not, guys. This is a dollar drop, 50 cents. It dropped. That's not bad. ACRX. This is one of my big beasts. This is one that I love. You know, May 12th, it had a drop off on its earnings. May 13th, completely sideways. Market demolishes itself, and the stock doesn't blink, just goes sideways. Still has a buy rating, still has a price analyst of $8. So this is a big one for me. This is going to be a big play. I see the opportunity to go 8 times on what I put on this, but again, I have to hold that for almost a year. So that's what I'm looking at with that play. As far as this one goes, CBay, this is a NASH drug. This is had some positive news of late. Here's the 13th, open, close, almost a complete line sideways here. So again, like these stocks are just insulated in a lot of ways from what's going on in the market. So if you're worried about, where do I put my money? Where's a safe place for my money to be? If you understand any industry, whether it's tech, whether it's bio, whether it's energy, you're gonna know the plays that just don't move on bad news. They don't move with the market. They are insulated. And for me, I see a lot of biopharmaceuticals that's the case. I actually see biopharmaceuticals that gain when the rest of the market declines. So yeah, really like that. What else am I looking at? So let's clear this chart because we're going to put our plays for today in here. I'll leave ACRX because that's a big beast for me. I want that in there. Now we head to press releases for the day. So what I have here is a tool that helps me to break down press releases across the web. I've created custom RSS feeds for each of them so that it reports directly into here. And then I just go in and take a look at what's going on. So Tetraphase plunges 7.3%. Tetraphase is relevant because they are supposed to be getting acquired by ACRX. So let's take a look at this, see what it has to say. This is a fundamental analysis. For complete technical analysis, I don't really care about the technical analysis. It doesn't explain why the stock moved the way that it did, right? I'm looking for the news of why it moved. And the lines themselves is not enough. It's not sufficient. Okay, so here's an 8K filing for Tetraphase. These are SEC filings, guys. This tells you something about what's going on here. Let me just scan this. Blah, blah, blah. Received an unsolicited proposal from Lajola to acquire Tetraphase, potentially payable, blah, blah, blah. Tetraphase also previously announced that they had a potential takeover by ACRX. That's the company that we're looking at there. With respect to the acquisition of Tetraphase by ACRX, pursuant to which outstanding blah, blah, blah. On May, Tetraphase received a revised proposal. Later on May 12th, the Tetraphase board determined in good faith after consultation with its independent financial advisors and outside legal counsel. They think that Lajola's proposal is superior to what ACRX is offering, and that failure to So they are considering the Lajola proposal. That's the news that's dropping here today. Is that this third party bidding war? As of right now, Tetraphase is still recommending the ACRX merger. It's not withdrawing that recommendation, and it's not making any recommendations for the Lajola proposal. So they're still saying they prefer ACRX. The funny thing is, so in this grand scheme of things, guys, if Tetraphase chooses to go with Lajola, they still have to pay ACRX $800,000, which is more liquidity coming out of the deal. So you have to tack that onto the bill. And then on top of that, you're still going to be selling. You have a contract with ACRX to sell their drug, and vice versa. ACRX is still going to sell your drug. So even if Lajola does buy out Tetraphase, that contract remains valid. That training and that sales pipeline have to remain. So either way, you're looking at a gain. 8K results in operations. DMPI is another one that I'm currently in. Reported earnings. So this is good. They are unaffected by COVID as far as delaying their studies, and they will be presenting at the ASCO on the 29th, which is big. That's big news. So I do expect this guy to go up into the end of the month. FDA, let's see what approvals we have here. So I do like DMPI here. I'm going to add that back in. DMPI. No hablas español. As a Canadian, I speak French and English, but Okay, so this is news about remdesivir. This is about that play is gone. It has come and it has gone. Telethermography devices. So those are the ones that take the temperatures based on scanning or based on fever. You just put them up. They're non-contact, and they tell you whether somebody's got a fever. Fast track designation for coronavirus. Okay, so that's Moderna getting the fast track there. Yeah, so Moderna is on the fast track here, so we're going to put them in here. Okay, that's it in there for now. Let's move on to ETFs. Biotech ETFs gain from latest cancer drugs. IBB, XBI. Yeah, those look about right. Okay, so there's nothing there that is particularly different from what we already knew with ACRX, so that's fine. Let's go back over here. FDA approved, FDA approval. LY. See, this has a ticker, Blueprint Medicines. Privately traded company. Privately owned company, I should say. Okay, that's it for that. Brolacidin. So this is conjecture around IPIX, which is one of the 8 drugs that are currently being looked at for a COVID vaccine. It's the one that I like the most because it's not just going to be able to be used as a vaccine, but it can also be used as a treatment and to stop secondary infection, which is a big deal. So is moleculin outpacing? And this is nothing new about moleculin. It's halted, so that doesn't mean anything for us. Again, guys, there's lots of news here, but what I'm looking for is specifically news in the biopharmaceutical sector. That's what I trade. Phase 3 trials, that's worth looking at. Okay, let's see here. Take a look at this just because a lot of people were talking about Wix. We can take a look at it and see how it performed. Hollister Biosciences. We're at that point, guys. If you have a stock that you would like me to take a look at, I am more than happy to do so. Just put the ticker in the chat, and I will do my best to get around to taking a look at it. Okay, let's see what we got here. So this is RGN. RGRX. Because they weren't able to find enough patients, this test was ended early. 6 out of 10 patients were treated in the group, and 1 out of 8 patients in the placebo-treated group achieved complete corneal healing. So this has to do with the retina. This has to do with eyes, dry eyes. No safety issues, and it worked. April 30th, met with the FDA. BLA readiness for non-clinical animal testing, manufacturing methods, and quality control. Discussion on clinical design trial requirements for BLA approval was also reviewed. Corneal disease, decreased sensitivity to the cornea resulting in corneal degeneration, so it causes blindness. Rare disease, 5 per 10,000 people in the US, so we've got 300 million. Calculator. 300 million people. Uh, 10,000, so 30,000 potential. And then 5 out of every 10,000. So there's 30,000 10,000s and 5 of those. So not a huge amount of people could be treated by this, which is why the cost is $47,000. That one may be interesting. Wix had a good return. Hollister Biosciences, so pot company. Yeah, no. Pot stock. Not a fan. Not a fan of the pot stock. Even if it's backed by Tommy Chong. Still not a fan. Okay, that's it. We're through the press releases. Wow, time, she flies. Guys, I will be back in 60 seconds. Just need to... Excuse me. Just need to catch my breath here. I will be right back. Man, oh man. Stay with me. I will survive. Holy cow. Okay, I'm not seeing a ton here. As far as breaking news, I do want to read this. So the Supreme Court has issued a statement. The lockdown orders have been challenged across all the states. The latest decision from Wisconsin marks the first such lawsuit to succeed. Oh, okay. So, Wisconsin Supreme Court has ruled the state must reopen. So there it is. It's the first court case that has overturned state lockdown. This sets a legal precedent. This is going to be a big deal because other states now can just piggyback on that Wisconsin ruling, claiming it as precedent. It's going to be interesting. I mean, the biggest issue with the lockdowns, guys, is the U.S. right to assemble. Okay, so this is the big problem here, guys. Freedom of assembly in the United States is guaranteed by the Constitution. First Amendment of the Constitution. I just want to find it in its exact. The First Amendment prevents the government from making laws which regulate an establishment of religion, prohibit the free exercise of religion, or abridge the freedom of speech, the freedom of press, the right to peaceably assemble, or the right to petition the government for redress of grievances. So this is the big one, the right to peaceful assembly. The Americans are granted a right under the First Amendment to have peaceably assemble, which means that they're able to gather and there's not massive brawls breaking out. People aren't dying as a result of it. Now, the states are arguing that by groups gathering together, you are not peaceably assembling because you're spreading COVID that's causing people to die. And while that may not be immediate, it's still happening. And so that was their argument. The Supreme Court in Wisconsin has said absolutely not. That does not constitute a breach of peaceably assembling, people being in society doing regular day every things. We're not talking mass protests. We're talking people that are just going to the grocery store. We're people doing regular everyday activities. This law is not defensible by the First Amendment, and they struck down Wisconsin's lockdowns. I think we see a lot more people rallying around this First Amendment. Larger states like New York and California that may not go through the Supreme Court the same way, but I think smaller states like Wyoming, Ohio, Utah, you're going to see things like this pass through. You're going to see them go through on that First Amendment defense. I think that's a real thing that we need to be worried about. Elon Musk finishes digging Las Vegas loop train. Let's head over here. If you guys are unaware, this is a kind of a neat tool that you can use if things get tucked behind paywalls like this. Outline.com. You can just put the URL in, and you won't get all the pictures and the graphics and all that stuff, but what you will get is the full article to read. It's going to be very useful. A lot of financial papers are tucked behind paywalls like that, so this is a helpful way to get around that. Tesla is going to go up on that. "16-passenger Tesla vehicles are going to carry people back and forth to the stadium. Okay, so that's great news for Tesla. They've reached that milestone. They're prepping to go to the next. Let's head over to Twitter here. Okay, let's go into articles here. People are looking for recession-proof stocks. At least did show up at the factory in California. Excuse me. Okay, again, I want to read the entirety of this. So the police did show up. This is funny. So Musk said, Alameda County, their health representative said, no, you can't reopen Tesla. No, I'm not letting you. And Musk said, well, I'm going to do it anyway, and you can try to stop me. Well, the public health officer for Alameda County then said, late on Tuesday night, so as we're going into Wednesday, when Musk said he was going to do it anyway, she said, "Oh well, you know what? I'll let you. I'll let you augment minimum basic operations. I'll let you do that." To which Elon Musk had a good chuckle and went, "I wasn't waiting for your approval." President Trump and the Treasury and the governor of California all support the car maker and what he's doing. County said Wednesday Tesla representatives confirmed the company was not fully operating. Tesla has confirmed its operations require substantial lead time to become fully operational. The current operations are only slightly above minimum business operations. Okay, so police showed up. Everything was fine, so that's great news. Okay, another album. Okay, what else we got going on here? Head back over here. So it's been a decade since the Hound of Hounslow. This guy here, super wicked smart guy, was able to actually crash the market 10 years ago. Uh, they're putting the blame on him. I put the blame on the markets for not having the necessary checks and balances to prevent a single trader from doing that. But yeah, I mean, people are still touting this like it's going through. There's no way they allow Uber to buy Grubhub. No way. Okay. So high yield savings, Citi and HSBC are the two banks that you want to be looking at. What we're doing now, guys, is I've gone through all the press releases. Yeah, gone through all the press releases. Gone through the 1,800-page stimulus bill. We did that first thing this morning. Gave my insights on that. Pokemon's birthday today. Happy birthday, Pokemon. COVID-19 may never go away. Innovative use of VR out of Taipei. So in Taiwan, they're using VR to train doctors on how to do COVID testing. See what people are talking about on stocks to watch. And let's hop into No, that's not what I wanted. I wanted this. There we go. Let's see what's moving pre-market here. Codex is up again, so this is coronavirus testing. Guess I have to add that to my list. So actually, I'm not a fan of Gilead. So I'll give you the breakdown on Gilead and Moderna. So with Moderna, I think Moderna is closest to actual delivery on a vaccine. They aren't the leader that I like. There are 8 candidates that they're looking at right now for coronavirus. Gilead's remdesivir is extremely toxic for anybody that has a liver or kidney problem, and anybody that has moderate to severe COVID exposure. It is not going to do well with remdesivir. It's going to cause more problems than it's going to solve. If you're pregnant, if you're breastfeeding, you also can't take it. Elderly are going to have a hard time taking it. So I'm not a fan of Gilead. As far as Moderna goes, they are furthest ahead, but they also have had relatively poor results as far as secondary infection, almost no effect on secondary infection. And as far as treatment, Moderna's vaccine does nothing. The stock that I actually like the most for this is iPix. The drug, it's one of the 8 drugs that the CDC and the NIAID are taking a look at. Berlacidin is the name of the drug. So iPix is the name of the stock. I'm not recommending you buy this. I'm just putting it out there so you can do your own due diligence on it. But iPix is the name of the company. Berlacidin is the name of the drug. And what has people so excited about Berlacidin is it's actually a 3-in-1. So Berlacidin has the ability to be used as a vaccine, but it can also be used as a treatment for people who have contracted the disease, from moderate cases all the way to extremely severe cases. It has extremely low cytotoxicity, so people aren't getting sick taking it. And even better, because it has some antiviral properties as well, it's stopping secondary infection. So this is a 3-in-1. It can be used as a vaccine, treatment, and as a preventative for secondary infection. So this thing is a bad boy. It's a big beast. This is the one that I like the most. Of the 3 major companies that we're talking about, which is Gilead, so GILD, mRNA, and Sanofi, SNY. I think Sanofi is probably the big beast that, as far as a larger company that's producing, I think that they're the one to go with. My down low pick is definitely Berlacidin, because governments like to have a solution where they can just pay money one time to get a solution for a whole bunch of stuff, right? If they can just invest in a single drug that's going to do a whole bunch of stuff instead of 3 independent drugs, they're going to do that. Just governments are cheap, right? Berlacidin presents that opportunity where this is a drug that's already been tested. It's been around. It's been on the market for a while. We know what it does. We know what it's capable of, and that it can be used for all 3 makes it a really appealing opportunity. So those are my thoughts on Moderna and Gilead. Yeah, mRNA is on my chart. It's something that I will be recommending just because they have received fast track on phase 2 testing. I'm not a huge fan of Gilead at all. I'm not a huge fan of remdesivir. But as always, guys, especially with biostocks, do your due diligence. Take the time to put in your studies. I've been up since 4:30 and I'm just scratching the surface. I'm just putting my list together for today for what I'm watching and what I'm recommending for myself to take a look at. Again, guys, you can go back through this video and see why we're breaking this down, what that process looks like. But the reality is it's just a big beast, biopharmaceuticals, and you need to do your time. You need to put in the due diligence, and you need to not listen to just random guys like me. You need to, it's great to ask questions and say, okay, well, what do you think about this? But then you need to go in and actually do that research yourself, break it down, make your own opinion, and then make your own trades off of that. Never, whether it's on the stock market, whether it's here on Twitch, whether it's on YouTube, wherever you guys are going to get your financial information, just because somebody else says they like something never means you should buy it. If somebody else says you should buy it, you definitely shouldn't buy it. What you should be doing is taking your own time to do your own research. So that's the best way that you can trade the market. Hopefully that's helpful. Yeah, but if you guys, we're at that point now where it's like 6 a.m. I've gone through all the news. I've gone through 500 press releases. I've gone through the 1,800 page Heroes Act bill. If you guys have stocks you want me to take a look at, I'm more than happy to take a look at it and do some due diligence here on stream and figure them out. I will just be going through press releases and trending stocks for the rest of the stream until 7 a.m. So that's there. Novartis says COVID vaccine may take until the end of 2021. Okay, so this puts Novartis. Look at Unilever. Okay, so a couple of different ways that we can do that. The one that I like to do is Google's the biggest beast out there. So a lot of people have favorite news sources, whether that's Bloomberg or Seeking Alpha, whatever. I like to go into Google, open up the tools, past 24 hours, not past hour, past 24 hours. Okay, so forget Unilever. Procter & Gamble's a better. President of Unilever addresses grocery price increases. Shareholders of Unilever expect a dividend payout. Okay, so, and we'll go over here. Where is the, I just want the, there's a couple here. Do you want the OTC one? Are you looking at UL? Are you looking at UN? I think you're probably looking at UN here for Unilever, right? Okay, so here's Unilever's performance, recommended sell. Yesterday's performance, let's look at the 5-day chart. So yesterday, 49 down to 48. So not a huge drop. It's kind of unattached to the SPY movement. These articles, let's see what the current consensus is. They don't like Unilever, Netherlands-based. It's outside the U.S. That's always a big thing. Procter & Gamble is American, so when you've got America, you want it to be American. I'm gonna ask that you don't post ad viewer crap. This stuff is just something that I can't stand. I'm not in this actually to have a ton of viewers. That's not the objective here. The objective here is to help people learn about due diligence and how to trade the stocks. I don't care if there's one viewer. I don't care if there's a million viewers. It doesn't matter to me. So I just ask that if you want to hang out in here, no problem. But keep that spammy bull crap to a minimum. Yeah. So, but the problem with that industry is there's so many other competitors, right? You've got Procter and Gamble, you've got Johnson and Johnson is up there. There's a lot of companies out there that are also in that industry, and it's competing against them, right? So, Procter and Gamble seems to be the better bet just because it's American. The other thing is because they're Dutch based as opposed to US based, they're having a hard time getting product over here, whereas Procter and Gamble is based here. Is Unilever going to pay a dividend? It does look like they are going to pay a dividend. So if you're building a dividend portfolio, that may be an option. They are not going to pull their dividend, it looks like. So that's that. I personally only trade biostocks. I guess you could say it is a biostock. Its performance over the past month. Well, let's go 3 months. Okay, so here's March, April, May. I guess I gotta go back to 6 months now to see the drop. Okay, so February we see COVID hit. It gets a slight increase, and then in March it decreases. This is not a stock. This is not a chart that I like to see. During COVID, this should be on an uptick. It should not be declining like this. I would stay away. So what are dividends? Dividends are if you own, this is best shown using this. So let me pull up another tool and I'll show you. So I'll pull up my advanced dashboard here. So I trade through TD's Advanced Dashboard. This is a Canadian tool. It's similar to Think or Swim that you guys can have in the States. So let's take a larger stock. Yeah, let's take a larger stock. So let's take a stock like maybe Ford. Let's go with Ford. So Ford's a big company, right? And the reality is the stock doesn't move that much. So you're not going to see people really day playing Ford on price movement. It's just not going to move much one way or the other. Okay. So here's one here, Total Energy, TOT, okay? So a dividend is for every one share of TOT that you own, it pays a dividend of 8.7% of the value of the stock, so $3. So for every one share of total that you own, you get paid $3 on what I think is a quarterly dividend. So 4 times a year, you would receive $3 for every share of total that you own, which is a pretty decent dividend. So one type of portfolio that people build when they're in the stock market is a drip portfolio. And the way that works is when payday comes around, you've got $100, you got $200, right? The way that works is for $200, well, what I'll do is I'm going to put $200 into the market and I'm just going to hold Total Energy forever. That's what I'm going to do. And so I'm going to every paycheck that comes around every 2 weeks, I'm going to put $100 into Total. I'm going to buy 3 shares, right? So let's open up the calculator here. So you're going to buy 3 shares, right? And you're earning, let's say, so every quarter you're going to earn $3.30 for every share that you have. So every 2 weeks over 3 months. So you're going to have 3 shares by 6. So you're going to have 18 shares, right? So the way that this method works is, so you're going to have 18 shares, you're going to earn $3.30 per share, right? Okay, well now you got $60 just for owning the stock. You didn't have to buy it, you didn't have to sell it, you just get paid a dividend, right? So you get the dividend for $60. Great. So now that you've got $60, what are you going to do with it? Well, you put it back into the stock and you buy some more shares, right? So you buy 2 more shares, let's say, with that, and now you're up to 20 shares. Great. So now you've got 20 shares, and you go into the next quarter and you're going to have 38 shares, right? Because you buy another 18. So what we do is we go, okay, well now I've got 38 shares times the 330, right? Now, oh, I made $125. So now I'm going to buy 4 shares with this. Okay, great. So now I'm up to 42 shares plus the other 18, right? So 42 plus 18 times 330. Okay, now I've got 198. So I'm going to add 5 more. I got 65 plus 18 times 330. So in 1 year of you just buying 3 shares of Total every 2 weeks when you get paid, what you're earning now is just $273 every quarter, over and over and over and over. Now, this is called a drip portfolio. This is what people, this is what I highly recommend people take a look at and go ask a financial advisor about if you are very young. If you are in your 20s, heck, even if you're in your 30s, guys, a drip portfolio like this is very, very attractive because imagine just getting a paycheck for $273 every quarter, right? That's not a bad deal, but you saw how quickly that was 1 year. That was 1 year it got to that point. If you continue to do this, or you decided, I've got a stimulus check for a couple $1,000s, where do I put it? Well, put it into something like that. And now what you've got is this nice drip income that's coming in, and you can just keep reinvesting that, and that's a great retirement plan. So this is one of the vehicles that I really like for financial planning. Is it's not one where you have to be, it's not sexy, is what I like to say. Like, people picture the stock market, they picture Wolf of Wall Street, or they picture Rogue Trader, or Wall Street. They picture the movies where people are buy, sell, you got to get in, you got to watch the charts, you got to do this and that. More often than not, successful trading strategies are boring. They are not super fast paced, let's move, let's go, let's do this, let's make it happen. I think for most people, this kind of passive trading is a much better way to go in building out a portfolio. So the two things that you want to look at, guys, when you go into your platforms, current stock price does affect this. So you can have very big stocks that have dividends and very small stocks. So if we go over here, you'll see that on this watch list, there are currently 4 stocks that are providing dividends. And they range in different yields. So what yield means is this percentage of the stock value is what the dividend is going to be. So that's one thing that you want to watch for, is what percentage of the stock value is going towards it. Total is an 8%, SPY is 2%. Now, the other thing you got to consider is, well, that's 2% of the SPY is worth 200, right? Whereas total is worth 30. So 8% of 30 or 2% of 200. So you have to take that into account. The other thing that you want to take into account, guys, is the frequency that dividends are paid out. There are some dividends that are quarterly. There are some dividends that are monthly. That one's very rare to find a monthly dividend. And there are some that are paid annually. So you need to understand the frequency of payment. You'll have to include that in your strategy and in your planning. But really, it's a great way to go. There's lots of resources out there. If you search dividend stock plays, you'll see lots of dividends that pop up. Before this crisis, MFA was actually one that had a 10% dividend. So I really like it for that. So hopefully that's helpful. Now, bio stocks was your other question. So bio is just a short term for biopharmaceuticals. It's anything that's in the medical industry is essentially what I'm looking at. The reason I like biopharma is I find that it is insulated from the market. It's separate from the market. So if finances on any major company come out, so Amazon, Tesla, Facebook come out and they're bad, typically that can move the market up or down one way or the other. You get bad news from Trump about a bill or about a war or about oil. We see the whole market move. But for example, yesterday, so here's ACRX. This is one of the bio stocks that I like. This is one that I invest in. If you're going to invest in it, I suggest you do your due diligence and understand why you're investing in it. But no, not all, guys. I'm glad that it's able to help at least. So what I like about biopharmaceuticals is yesterday we saw the SPY drop, right? So here's the SPY. This is an ETF that represents, it does its best to be a snapshot of the S&P 500. As a whole. Okay, so the top 500 stocks on the stock market, it does its best to represent that. The SPY just took a huge dip when Powell said we are going into the worst recession since World War II. It dropped from 286 down to 280. That's a massive drop. Meanwhile, if you head over to ACRX, it just went sideways. It was completely unaffected by the news. It's actually technically up for the day. It was up a penny for the day, but it just goes sideways. So biostocks tend to have this track record where they are just separate. Biostocks operate on their own news. They don't affect the market. So if Merck has great news about their drug, the whole stock market's not going to go up. But you trade more on FA than TA. And if you're not familiar with the two approaches, TA is technical analysis. So you see all these lines and people drawing. You've probably seen that if you're watching stocks on Twitch or if you're watching stocks over on YouTube. You've seen people drawing lines and doing calculations. That's not how I trade. I do use TA to reaffirm the decisions that I'm making. So I do have MACD, I do have RSI, I do like to track volume, I do like to track moving averages. But that I don't trade on that. What I trade on is news. And in biopharmaceuticals, news is king. One day you could have a stock that's completely sideways. I'll show you some examples here. So GNFT got some bad news earlier in the week. So let's go back 5 days. They got some bad news that their drug had been denied earlier in the week, and they dropped from $21 down to $8. Now, if you were playing the short side on this, you had a short, or you were playing options and you took a put against them, you would make a lot of money on a movement like this. This is huge. Now, when you go the other way, where you have a stock like, we were talking about Moderna earlier, right? Let's go back 6 months on Moderna and see where they were. So 6 months ago, Moderna was worth $20. And then COVID came and we were talking about vaccines, and now it's worth triple what it was. So you could play this on equity, which is how I play. I play stocks. I don't play options. I have a very small, like less than 1% of my portfolio is in option plays. The majority of my holdings are in equity. I play stocks. I don't play shorts. I don't play against stocks. I play positive movement on stocks. So I'm looking for good news on equity, and that's what I play. So going back into February, this was outside my price point for my portfolio, $20 a share. But I for those that are in that price range that can trade this would have been a fantastic purchase. You would have tripled up. You would have had a 300% increase on your investment, which is great. That's absolutely fantastic. So here's a list of stuff that I watch on the daily. This is an ETF that represents a package of biopharmaceuticals. So I just use this as an indicator for market sentiment as a whole. What does the market think of the biopharmaceutical sector at the moment? Currently, it's very positive on that. So that's good to see. This can go because that's Ford. I don't want that on this list. But yeah, here's some bigger guys. You've got Pfizer, you've got Sanofi, you've got Bristol Myers, Merck, Gilead. There's not any other really big players. This is the only thing on here that's not biopharmaceutical. My most invested in stock. My holdings aren't populating right now. Oh, there they are. My most invested in stock is currently this one here, ACRX. There's 13 grand in there. I'm a big fan of ACRX. And again, guys, whenever I say I like it, you should go do your own due diligence. What I like about ACRX is I really enjoy, so it has an agreement. One of its major drugs is Dasuvia, which is a replacement for morphine. And it has an agreement with the Department of Defense in the U.S. to replace morphine as of Q4 in the U.S. Army, U.S. Navy, U.S. Air Force, U.S. Coast Guard, U.S. Space Force. All of those guys are switching from morphine to this drug, which is kind of a huge deal. That's a big deal. On top of that, the medical industry is also taking a look at acquiring it because it's different than the current opioids on the market. So currently, if you're going for a surgery, you're old, you're young, whatever, and they give you an IV, right? Like, here's some morphine, enjoy that. The problem with morphine is it's highly addictive. It gets people nauseous. It makes them sick. It makes them disoriented. It makes their stay in the hospital much longer because they're using such a powerful sedative. This thing that ACRX has created is sublingual, which means it's like a little tablet that you put under your tongue. And what the surgeons are finding is people that are coming in that would typically take weeks to get out of the hospital are now day patients. So if you're an elderly person who slips and falls in the winter, cracks your hip, you need hip surgery, you come in, they give you one of these under your tongue. It lasts for the duration of the surgery, and it also lasts for the rest of the day into your return home. You're conscious, you're not woozy, you're not nauseous, you're coherent, so you're all together, which allows the hospital to release you and send you home with some prescription pain medication. So that's kind of a huge deal that you can cut patient time in hospitals. People aren't woozy, they're not being addicted to these opioids, they're not going to be available at pharmacies. It's a big deal. So for me, I really like that. The stock is $1.50. I think it is extremely underpriced. Its market cap is 123 million. They're projecting the first order for the U.S. Army, just the Army, not all the other branches of the U.S. military. They're expecting a $30 million initial order. So we're talking a quarter of the value of the company. So I really like this company. I think price estimates on it right now are around the $8 range. That's where people see it in 12 months. I think it actually has potential, if the U.S. medical industry gets behind it, to be much more than that. So this is a big one for me. I'm a big fan of it. I do like this one. But there's lots of other plays right now. It is Cancer Month. We have the ASCO meeting at the end of the month. So DMPI, Del Mar is one that I'm looking at. Lilly is another big one that you can play if you're an options trader. They've got all kinds of great news that's coming out. Regenerix, this is an OTC stock. I'm not a huge fan of penny stocks, guys, but do your research. They did just have great news on a treatment, so that's why I'm taking a look at them today. Codex does coronavirus treatments. That's why they are up. IPIX is a potential COVID treatment. Again, penny stock. Really, guys, be very careful with penny stocks if you're going to trade them. And then Unilever is what we looked at. I don't think there were any other questions. So if you guys have stocks you want me to look at, I'm happy to do that. Yeah, so as far as when do I start trading, guys, with that drip portfolio, like I showed you, if I asked you how much do you spend on beer or Netflix or cigarettes or
pot or whatever your thing is, right? If I ask you how much do you spend on that in a month, and you tell me $100, well, like I showed you with that drip portfolio, just $100 invested into dividend stocks over a long period of time is actually a great way to get started. So even if you don't want to actively be in the market and investigating stocks, that's not a problem. No problem whatsoever. It's a huge time commitment. I put 14 hours a day into the market right now. So I get it, guys. I get where you don't have the time to do that. But what I do want you to acknowledge is that that doesn't mean that you have to stay completely outside the market. Go put $100 into an account and just start buying dividend stocks. And every time you've got enough to buy a share, you've got 30, $40 kicking around, throw it down, buy one share of the dividend. And that slow drip investment, you saw how quickly that can just grow to be a sizable holding that produces some really fantastic results for you, right? So that would be my recommendation, guys, is take the time and do that. Really make the effort to even if you don't want to be actively in the market. Can I have a look at INO and MGNX? Okay, so INO and MGNX are two that I am familiar with. INO is another one that is COVID related. So here's performance yesterday. This is over the 6 months, actually. So let's change this chart down to 5 days. It's still up over the 5 days. So Novia Pharmaceuticals is one of the one that is pairing with Moderna as far as development of vaccine. So once a vaccine is found, INO is going to help produce it. This is a COVID only play though, guys. And so with COVID, you have to realize that you are not playing into Q4 of this year. You are playing into Q2, Q3, Q4 of 2021. This is a long hold play. It's not going to skyrocket again. What you're going to see is this stock slowly tick up. I'm not sure what the consensus estimate is on it, so what people expected to do over 12 months, but I would see Inovia not being a developer itself of the vaccine, probably being a max out at $15 over the next 12 months. That's my opinion on it. You guys can do your own due diligence on it. MGNX. Not MGNA, MGNX. Okay, Macrogenics. So let's go here. Let's do MGNX. So this is where I do like Seeking Alpha. I can just get a quick review of this. So yesterday they announced the results from their two drug candidates. They are headed into ASCO, so at the end of the month you should see a gain on that. Let's see how they performed here. Phase 1 trial demonstrated response in 40% of late-stage positive tumors, so they're a cancer treatment company. Overall safety profile in the Phase 1 study appears generally consistent with anti-PD-1 antibody monotherapy. Dose escalation Phase 1 study showed preliminary signals of anti-tumor effects, including prostate-specific antigen reduction, so prostate cancer is what they're treating. Okay, so this is saying as of yesterday, it was down 20%. Yeah, so I mean, pre-market it's down 21% right now. They do have an ASCO presentation coming up. I would say, for me, taking a look at what I see here, so they had not great results from a test. Not the results anybody wanted to see, actually. They want to see a better success rate than 40, 50%. Typically, you want to see 70, 80% on these bio tests, right? So, I mean, I think there are better plays out there than this one. That's what I will say. It's not a terrible play. ASCO is one of the biggest cancer conferences in the world. That they are going to be there is kind of a big deal. So it does have potential for gain, but the performance on those drugs was not phenomenal. So I would not play this personally. I don't like the layout. Let's take a look at EZJ. Okay, so guys, this is outside my wheelhouse. I do not typically trade. Um, no, EZJ is a ETF on Japanese economy, so it's not that. Let's take a look at EasyJet. EasyJet PLC. Okay, so this is a penny stock, guys. Again, I'm always going to advise that you shy away from penny stocks. It's very difficult to get filled on this. EasyJet is borrowing like crazy. It grounds its entire fleet. I would be nowhere near this, guys. It's grounded its plane. It's taking on significant amount of debts in the hopes that airlines immediately recover, and I just don't see an immediate recovery in the airline industry. I know a lot of people in business. I am a digital marketing consultant. I do travel. I do public speaking. I know a lot of people are very hesitant to get on a plane right now. I don't see the airlines just recouping. I don't see airports just recouping. I would not. I personally would not play this. I don't like it. You should do your own due diligence on it, but I do not like this. Again, guys, just to qualify, I'm not a financial advisor. You guys should make your own decisions, your own plays, do your own research. I'm more than happy to look at things and give you my opinion on them, but this is not financial advice in any way, shape, or form. If you want financial advice, go see a financial advisor. As for me, this is just opinion from a guy just like you, sitting at his desk in his office, trading in his PJs, right? Like that's where I am right now. I start at 4:30 in the morning. I go to 7 every morning, and I just look at the market. You're not going to see me actively trade live ever. I'm not going to do that. I think that is extremely risky. I think just by showing people what you're trading, you're influencing their decisions. So, yeah, you're never going to see me trade. But you will see me do my research in the morning and give you my insight on research. So that's EasyJet, that's INO, that's MGNX. Typically right about now, we're going to start to see news come in, so we can pop in here and see if there's any major news. We are still in earnings season, so we're seeing some earnings come in. Gold is winning, more debt. Uber offering notes. This is brutal. So Uber, guys, is offering notes. They're trying to raise capital. These things are CCC plus rated. They have a 75% default rate. This thing is garbage, absolute garbage. Nobody should be touching that stuff. It is super scary. So here's a big one. So this is a great one to look at, guys. Applied DNA is up 57% after emergency use on their COVID test. So if you check them out, this is how quickly biostocks can move. So 889 as of the close yesterday. As of this morning, $13. You'd be up 46% right now. That's how quickly biostocks move on news. A single headline, one headline, just the headline's not even here. It's not even here yet. So APDN, that's going to go on my list. I'll watch that today. Yeah, so if you guys have any questions, feel free to throw them in there. We've got about a half hour left here. I am just going to run ads real quick. I usually run them every 45 minutes or so, just so that I can get up, have a stretch, take a break for a second, and I will be right back, guys. Give me 60 seconds. He's on All right. And we're back at it. Let's see what else we have going on here. So let's go back to the RSS feeds right now, see what's coming in on press releases. Lady Gaga's Born This Way Foundation, Regenix, that's one that I'm already looking at. Okay, so nothing new there.
Thermal cameras are terrible at exposing COVID. Companies are buying them anyway. Keep that in mind. If you guys are going somewhere and they say, oh, we're safe, we have thermal cameras. No bueno. No bueno. Market watch. NVIDIA unveils. So this will be big for NVIDIA today. Big AI boost on their GPUs. Anytime there's news about new tech goes up. So that'll be a good one to have there. Tesla got good news. Novartis got bad news. So that's one that I didn't add in here. Novartis. For it when it's not OTC, to be honest. There's not a choice. So this is a European company, but you can tell that this is a very large pink sheet. So typically when you talk pink sheet, when you're talking OTC, this is the penny stocks listing, OTC. But clearly this is a big penny stock. You will find stocks like this on the penny stocks. They just don't have a listing on the New York Stock Exchange. So companies like Nintendo are not traded directly on the New York Stock Exchange. They're traded on the OTC market. So the pink sheet, the dollar, if you look at Nintendo, it has an official listing on the TSE in Japan. It's got a listing on the German exchange. It's got listings on the Mexican exchange. But as far as the American exchange, it's a penny stock. But it's a penny stock worth $52. So Novartis is one of those. Novartis had bad news. It looks like their virus is going to take their vaccine candidate is going to take a long time to get here. So I expect the performance on this to not be great. It doesn't have a lot of movement here though, so it just doesn't move a ton. Yesterday, this is the crash from COVID from February into March, and then the resurgence. I imagine we see it come back up to those 96 levels, but you probably can't play options on it anyway, so it doesn't matter. We're gonna get rid of that. So now we've got the press releases coming fast and furious. It's that time of day where everybody is putting press releases out just before the market opens. They want to get as much news out as possible to influence your stock list for the day that you'll be watching. So this is prime time. This is why I like to get up earlier, guys, and do the due diligence to break down how did my plays work out for me yesterday. What do I need to look at? What are the European markets looking like? What are the Asian markets looking like? If you guys are actively trading or whether you're looking to get into trading, a free resource that I really highly recommend is koifin.com. I'm not sponsored. They do not pay me to do this. But koifin.com, this is a really useful tool where you show up and bam, I hit show me the markets as a whole and give me a snapshot of what's going on. And Koifin pops this up, and here are the major US equity markets. So this is the major US stock markets: NASDAQ 100, S&P 500, Dow Jones. You can see how the market is performing pre-market. It's not looking good in the US right now. This shows you all the different sectors of the stock markets. So utilities, consumer staples, healthcare, real estate, communications, tech, materials, industries, industrials, financials, energy. It shows you all these different sectors. Everything is down across the board. Different treasuries, municipal bonds, high grade, high yield. It shows you that stuff. Global yield, it shows you how other economies are performing. Over here, you've got currencies. So typical currencies that you would expect to see would be this is always against the US dollar. So the US dollar against Bitcoin. A single Bitcoin is worth 9,700 US. The yen is down against the US dollar. The British pound is down against the US dollar. The euro is down against the US dollar. So that shows you the global economy is weakening while the US dollar is at least holding firm. Bitcoin, however, is seeing a resurgence. Bitcoin has been all over the place from the past little bit. If we look at the past month, it's been as low as 6,700, as high as 9,700. So Bitcoin's kind of all over the place. Cryptocurrency is a whole beast that I don't even touch. It's not something that I like. It's not something I go near. But that's there. Next, we're looking at global equity markets: emerging, developed, and frontier. Frontier would be super risky, like Africa. Emerging would be China, South Korea, Brazil. So countries that have a bit of industry, they're growing.
and then developed would, of course, be US, Japan, Australia, Germany, UK, France, any of the first world countries, TSX, Canada. So this, just by looking at this, these three here will give you a snapshot of kind of the world as a whole. Stock market is not looking great. This one here is your developed countries, so the strongest economies. Japan is up a little bit, but Europe is hurting. Australia is hurting. So that's good to keep in mind if you are interested in anything in those economies, especially the European markets right now. They are not doing well. There's a lot of confusion as to what Germany is doing going after the legal, going against the courts, the EU courts, I should say. So Germany's national court is defying EU law, and they're having a back and forth and an argument about that. The other one that you can look at really quickly is gold and oil. A lot of people like to trade these commodities, precious metals or oil, so those are there for you as well. You can see the gold's up a little bit. Crude and Brent continue to slide on bad news of oil. So this is a great tool where you just show up, you take a look at it, and it's like, here's a great snapshot in under a minute. Once you learn to read it, it's just super quick of like, oh, okay, I get it. This is what the world is looking at right now. What you're seeing here, this main page, this chart is a representation of all the major markets. So the NDX, SPX, INDU. So SPX is your Standard & Poor's 500. That's like the SPY ETF that we were looking at. That's what this is representing. So you'll see those two charts are very similar. The NDX is the NASDAQ 100. You'll see that's performing slightly better than the rest, but not... it is having better gains because it's a much smaller index than the S&P 500 or the Dow Jones. So, the other thing that you can do with this is kind of cool is you can head into top news, and it will break down top news, and then it will give you a bunch of the latest news. So this is good news for Organogram today. They're opening up and hiring more employees on. I like this much better than ACB. I will always sing the praises of Organogram. I do appreciate what their stock is, who they are as a company. I like what they do. They are one of the few pot stocks that is publicly traded on the NASDAQ. So over the past 5 days, what are we looking at? So past 5 days have not been kind. They've dropped pretty low, but that's good news that they had today that they have 50 more employees showing up. So that may be a potential play today. Yeah. Okay, so let's head back over here and take a look at... additional news. I guess my tunes died out on here. If you guys have any questions along the way, you see me pop up something and you're not sure what's going on, just ask, and I'm more than happy to take the time to break that down for you. Amazon's redeploying into the drone market. British pound is down. The reason why US funds are outperforming European funds is because the US has continued to invest in R&D, so they're doing their research, which is causing them to win. The more research you do in the stock market, the better off you're going to be. What else do we have here? So this is interesting. So Sanofi is a European-based company. They came out yesterday and said that they would give the US priority to a Sanofi vaccine. It was developed. The French government is saying that's absolutely unacceptable. You're a European company. You must deal with Europe first. We will see how that one plays out. Okay, so that's it for Bloomberg. Let's take a look at Yahoo Finance. So this is the big thing, guys, that low-income families have been hit so hard by this. Absolutely so hard. And they're seeing such little assistance from the government. Even with this new upcoming bill, they're seeing nothing. They're seeing pennies. It's a big deal. And most people think with economies that it's the middle class that you want to protect, right? You got to protect the middle class, and we hear this over and over and over again. For me, I'm actually a bigger fan of if you're going to build a skyscraper, which is what the U.S. is, right? If you're going to build a skyscraper, what part of the skyscraper do you want to be the strongest? Do you want it to be the middle of the building? Do you want it to be the peak of the building? Or do you want it to be the foundation that it's built on? For me, I'm always a big fan of the foundation. So where the bulk of the people are, that's where you want to focus your efforts. And by focusing on supporting the foundation of the building, you just build a much stronger building as a whole, right? So that way, when trouble hits, if the bottom of the building is the strongest, it can support the other two. And I know that sounds funny, where you're like, well, you're saying low income people are going to support the rich from on high. Absolutely, it is to the rich's benefit. That top of the building to support the lower half, because that's where all the spending is coming from, right? The top half may be the ones that are owning the companies, but those companies need to sell to people. And let's be honest, the majority of the sales are coming from down at the bottom. McDonald's makes its money on low income. So the guy that's running McDonald's, the executive, may be the top of the building, but it needs all the people at the very bottom to be buying Big Macs. And if they can't afford that, they can't afford that. Kroger's needs people buying groceries. And if they aren't buying groceries, you've got a bigger problem. So that we are seeing such little stimulus directed towards low-income housing, low-income households, low-income families, I think that's going to be a long-term detriment to small, mid-sized business. It's going to be a detriment to big business. The more that you can support that level of economy, the better you're going to be. Also, those are the ones that are losing their jobs. If you were to look at the amount of people that have filed for unemployment lately, that number is staggering. The amount of those people that have lost their jobs that are in the executive or management positions is very small. The executives are not losing their jobs. We're not firing CEOs. The people at the bottom, though, they are losing their jobs, and they're losing their jobs in a big way. And one of the risks is right now people are saying, okay, well, people are about to go back to work. We're going to open up the economy again. It's going to be fantastic. Maybe. There's a lot of businesses that are hurting in a big way. And when they open them back up, they may not be bringing everybody back. There's no assumption that you just have a job when you come back, when the economy reopens. So, yeah, pretty disappointed with the amount of stimulus that's coming that way. This is saying India needs more money. Mnuchin is trying to reassure people that they are doing everything in their power to make sure that the U.S. economy stays strong. Commentary on Dr. Fauci. Dr. Fauci did his job yesterday, took a lot of flack for it. I'm proud of him. He's got cojones, that guy, to stand up and just say, oh, well, this is what you're paying me to do, and I'm not going to lie to you. I'm going to tell you the truth. This is a big issue. So if you're not aware, South Korea reopened their economy, and there was one person who was COVID positive who went to one of the nightclubs there. And to date, they're estimating that possibly 40 to 60 people have now contracted COVID as a result of him being at the club. Now, the story that I just told you, like, well, what's the big deal, right? One guy went to a club, he's a jerk off, that's the way it is. The reopening, that should be the conversation. Well, unfortunately, the club that this person attended was an LGBTQ nightclub, and as a result, there is a large amount of backlash and animosity in South Korea right now against the LGBTQ community as a result of this. Just to be clear, this could have been any nightclub anywhere, and I think that the bigger story that people need to be taking, especially in South Korea, is not about people's sexuality and how that is affecting the outbreak. It's absolute nonsense. Anybody, anywhere can have the same effect. And as economies open back up, even in the U.S., when Georgia opened back up, we saw people rush into a chicken restaurant. So are we going to say that anybody that eats chicken is responsible for this? Absolutely not. Like, it's just It's a huge issue. It's a huge issue. They're missing the point. They're missing the story. The story is that public gatherings of that nature should not be safe. It's not okay. Um, so that's a problem. This is a really unfortunate that this is happening. Hatred at this level that is completely not backed by any proof whatsoever as far as COVID spread is just dangerous. It adds fuel to a fire that doesn't need to be there. Protests in Guinea. So this is what it looks like in countries that aren't the U.S. That's the military and police coming in to deal with protesters. This is what a lockdown looks like. They think that this is fantastic. There's a camera. They're cheering this. Like, this is what we're doing. Not good. Not good. So this is the other thing that I was talking about jobs not being there when you come back. All of a sudden, these companies are talking about automation and robots and things that they're going to bring in to do jobs that other people would normally do. What you're looking at here is custodians, right? Like, this is janitors. That robot is replacing 8 jobs, 9 jobs for that company. Normally, you would have people on staff doing this job, and instead now you have one machine doing the job of 8 or 9 people. It's kind of a problem, right? Yeah, kind of a big deal. Okay, 30 more press releases. So let's take a look at this. We got about 10 minutes left here, guys, before I cut off my stream. So if you have anything else you want me to look at before I head off, feel free to throw it in the chat, and I will do my best to take a look at it before we leave here. Any stocks you want me to take a look at, any questions that I can help to answer, I'm happy to do that. Here's another bio stock, SN Simount, Pharmatech, Jiling Labs. Oh, yeah, I'll show you how to do that. So the tool that I use, guys, is called Feeder. For those of you on Twitter, Feeder Co. is the name of it. Very cool. Yeah, and look up a dividend stock. Look up a dividend stock. Do your own due diligence. Total looks like a fantastic stock. But if you're not sure, guys, just call up a bank right now. They'd love to talk to you. They'd love to help you out. Explain that you want to create a drip portfolio on dividends with high yield, and they'll know what that means. They'll know what that means. So RSS, the way that this works is, let's say there's a company that I want to know about, right? So great, this one here. So Jiling Labs. I decide I want to invest in Jiling Labs. So what I'm going to do is I'm going to take this, I'm going to copy it, and I'm going to go over here, and I'm going to put that into Google search, right? Great. So I'm using Feeder. I go to news, Jiling Lab. I want the news on this. I want to know when they get approval on stuff, right? I want to know when that bio stock is doing something. So I head all the way down here to the bottom of the page, and you'll see something that says create alert. I click that, show options. As it happens, everywhere. I want it from news, from blogs, from social media, from the web, all of that. English preferably. I only really care about the United States. All the results, and I don't want it to come to my email. I want it to go to my RSS feed. So I'm going to create this alert, and what this has done is it's created an RSS feed. I click the RSS feed, and because I have this Feeder tool, I can subscribe to this. Now when I go into my Feeder, go back here, you'll see down at the bottom, bam, Jiling Lab. So anytime that something pops up in Google under Jiling Lab, I will get it in this feed. I'm going to delete this now because I don't actually want to track this company, but that's how I build out those RSS feeds. It is a great tool if you're going to be in the market. I use Feeder for I think the premium is about $15 a month. It's completely worth it. I get in-the-minute news. I don't have to leave my browser. I can stay in the market. I can stay what I'm doing. Whenever there is new press releases, you'll see a number pop up here telling me, hey, by the way, there's some more stuff for you to take a look at here. And it's a super easy process to do. The other thing that you can do with Feeder is if I go to Feeder directly, so let's go here, let's go edit feed. It'll take me to Feeder. What I can do is actually go to the home page, dashboard, add feed. So I can actually pick from a wide variety of sources. So depending on what industry you want to play in, startups, tech, sports, you name it, really. Um, for me, let's say business. Okay, so we'll go into business and I'll take a look here and go, okay, well, who do I really want to know is dropping news? Okay, well, maybe Bloomberg. Like Bloomberg's a big player. Okay, so Bloomberg, I want to know every minute. I don't want it to send me any notifications across any of these things. Done. Now when I go in here, I'm going to have down at the bottom, bam, Bloomberg. So it's a super useful tool. As you guys can see, 29. So that means that we, in that short little time there that we did that, 21 or 29 new press releases dropped out. Let's see if there's anything here of interest for me. No. Okay, so nothing there. Let's go back here, see what's happening here. Not all, guys. I really appreciate you coming through. It makes this a lot more fun to do when there's people asking questions and doing stuff. I would normally be doing this anyway by myself, so it's always more fun to break this down and look at stuff with a group of people. So there's another pharma stock. Okay, let's take a look at these guys. Okay, so they're up pre-market. It's a diabetes drug. That means that there's a lot of people that use it. This is for sales outside the US. Currently 364, so they're not up a ton. So yeah, there's a potential play. If you want to dive into that a little bit more, you can. The other thing, when you guys do this every day, so like I'm in the market from 4:30 in the morning until 4 o'clock most days, Monday through Friday. The thing with that is you get to learn what you're looking for really quick. So I can scan through this really quickly and go, oh, okay, well, here's something that I might want to look at. Okay, here's something I might want to look at. You learn to see that. And then when you open up the press releases and you see the information that's in there, okay, prices equity offering. This means that the stock had a rise, it went up, and they want to try to cash in on that, so they've got a public offering, it's going to go down. Note the closing date, that may be a potential play for it to go back up, depending on whether people still see value in this. So Kin says $18.99. If you take a look at it, they announced that they were going to do an equity offering. Bam, they go down to $18.40. It may resurge back up to $20, so it may still be worth being in. You buy now when it's low, knowing that on the 18th it may resume back to where it was. That's potentially how you could play those offerings. I don't recommend playing that. I don't really like that price movement, but yeah, it's definitely something that you can take a look at. Yeah, so Lily's is there. That's good. I know that. I've got that on my ticker. So this is bad news for Neo. Bad news for companies like Trump is saying there needs to be more transparency from Asian companies that aren't complying with U.S. law, and I agree. I think that's absolutely true. If you're going to be on the U.S. markets, you have to abide by the law. The shady finances that we've seen coming out of China are a huge problem. Luckin Coffee, most recently with its fraud, I think that's a huge problem that needs to be addressed, and Trump is right to call them out. He is. He's right. Financial Times. This is a real shame. So Amazon has been there all along. Amazon has been a major support to global economy in staying open and providing the supplies that we need. And it really ticks me off to see so many people are now looking to go after Amazon of like, oh, well, you're to blame for it. It's like, please. You know how many people would have been without basic necessities without Amazon? I think people need to lay up. Nobody did COVID perfectly. Nobody. And if you're going to rage against the people that risk their own personal health to show up and deliver you your products, I think you got a bigger problem. I think there's a much bigger problem there. Um, yeah, that really ticks me off for sure. Okay. All right, guys, that is it for me for today. That's 2.5 hours. I've got to actually go have a coffee with my beautiful wife and get ready for the market to open myself. Thank you so much for swinging by, guys. I know Martini Rita will be streaming later today over on Twitch. So, for those of you on Twitch, if you don't know Martini Rita yet, she blows my mind. She knows the stock market, she knows what she's up to. I highly recommend you check her out. I guess I should have done this. Um, I will be back tomorrow morning and every day from 4:30 in the morning Eastern Standard Time till 7. So if you guys want to swing back through, I appreciate the company for sure. Have an amazing day. Stay safe in the markets if you're out there. And I'll catch you tomorrow morning, guys. See you.